Well, welcome to this episode of the BCStrategies Experts podcast. Today, we're going to talk about something that is probably near and dear to many people's heart, which is pricing. It seems that there's lots of changes in pricing. With AI, there's new models, consumption pricing. Different vendors are changing, increasing, or changing their pricing. So let's talk about some of the changes and some of the things that you should be thinking about. And to get us started, I'm going to throw it over to the cloud economist, Joseph Williams. So over to you, Joseph.
Thanks, Kevin. And I'll just start off by saying go Seahawks. It's our weekend. So that said, 2025 saw a lot of dramatic price increases in the UC industry. We saw, by my estimation, about a 20% lift in prices. Some of that was explained away by the addition of AI capability, but in some cases, as Kevin mentioned, the AI capability is a separate charge in addition to the standard pricing. I think what's happening, it appears that with the consolidation in the industry, there's been a little bit of consolidation. The competition is not as fierce. And so rather than compete as much on price, they're working with their incumbent install base and just elevating the fees attached to what they're offering. The cost of changing is expensive for a large enterprise. And if there's been any kind of customization or any kind of security validation of the platform, to redo that is a lot. What I have observed, and I want to hear from the rest of you, the AI additions to me haven't been significant, certainly not worthy of up to $20 a month as an add-in. And so it remains to be seen how flexible enterprises are about paying that fee or accepting that fee as they move forward. I've also seen in the work that I do a little bit of a shift away from 8x8 and Ring Central toward Google Meet and some other platforms that haven't had the same amount of price increases. So I don't know if that's just momentary or whether that's a trend. So also, I'll mention with the return to office momentum that's happening in the large urban cities, it's not clear to me how strategic UC is going to remain to the workforce as opposed to business type communication. So, Kevin, my take is the price increases last year were very high. It's been a real sticker shock, and it'll be curious to see if they continue in 2026.
Well, that's great, Joseph. That was a great way to get us started. Let's maybe throw it over to Beth. Beth English, do you agree, disagree? What do you want to add to what Joseph said?
Yeah, thanks, Kevin. And I agree. And it's a little bit of everything, everywhere, all the time right now. Our clients are having to think about, some of them are still in the process of migrating to the cloud. They're thinking about teams. They're thinking about third party. They've got a contact center. We're rolling in AI. And now we have governance to think about. And all of those little components add up. And so we're working with a lot of clients as they explore the alternatives. For example, if I have teams, do I go direct routing? Do I go operator connect? Do I bring in my own SIP trunks? Do I have the staff to manage an SBC? It may be cheaper, but then I've got to manage it. Or do I try to integrate with a third party? And what does that cost look like? And then I have to think about my contact center. Is the platform I've got, is it something simple? Could I just add contact center to what I've got? Or have I got to have yet another third-party contact center add on to that? And then thinking about AI, we're not seeing a ton of people pull the trigger. We're seeing some different pricing models where people have implemented AI. They get a little sticker shock because they don't realize that there's a token they're going to have to pay for. So now they're starting to think about, how much do I need to throw over to the AI versus how much can I do in-house so I'm minimizing the tokens that have to go out and get price. We're starting to see some vendors come up with alternative pricing strategies. For example, on a consumption basis where we say, okay, we estimate your cost for that transaction if you use an agent is X number of dollars. We'll charge you half of that per transaction to make sure that you can see the savings on that. So a lot of those things are coming into play. And then finally, we've got integrations, because now we have a number of other CRM platforms, back office platforms, and all of it needs to integrate. And everybody wants to charge for their API and their transaction, and they all want to rule the world. They all want control. So what I would say is we're seeing an awful lot of complexity, an awful lot of options, and we're helping a lot of clients sort through what's best for them, because there isn't a one size fits all.
Well, so they all want to rule the world. That's you heard it here first. That's what vendors want. But it is certainly more complicated. Just to give a concrete example, so Microsoft got rid of their volume pricing back in the fall. So there used to be volume pricing, A, B, C, D levels. They got rid of that. They said it was simplifying and making it more fair across the board. And then come July 1st, 2026, licenses in the E series and F series, it's going to increase somewhere between 8 and 33%, depending on your license. So obviously that's causing people to go and redo the math and figure out if they're getting value for what they're paying for. And obviously, that means that's going to eat up more of their budget. But I know, Robert, I know you and I have exchanged some emails. I owe you a response as well. But you're talking about some, pricing of SaaS and what are you seeing? Because things are getting more complicated, as Beth said.
They are, and a lot of it is vendor tactics, and it definitely crosses over specifically to UCaaS and not just with Microsoft. A couple of things I'm seeing that are the real pain points for customers. One of them is the commitments. We've had proposals where they want very fixed commitments on specific types of licenses, and the reply is always, I thought part of the value proposition of cloud was the flexibility. Now you're saying, we have to, it's as if we have these subscriptions all hardwired into our organization. So that's a little tricky, and it can be navigated out of. I had one example where it was an organization that had a 1997 phone system that they were replacing in the middle of this. So this is years ago, in the middle of lockdown, and the new vendor wanted them to commit to exact counts for different types of licenses. And that's impossible. So the other thing is the token pricing. That's very, very new. Utilization pricing is not new for people in the telecom space, obviously, but the token pricing is very, very hard to predict. Especially on contact center flows, where for each little pass through, it's very much like Verizon used to have an old online IVR that counted every time it passed through a different function. But the vendors aren't very good at providing you any kind of predictions on what the token pricing is going to be for the solutions they're designing. So that makes it a really unpredictable cost and makes people very insecure about it. The other thing that's interesting is that while you say that Microsoft is trying to make it fair across the board, although I don't understand why someone with 20,000 licenses shouldn't get a better deal than someone with 900, but I digress. I've seen price escalations on contracts, not because there's an across the board increase on the rate for the core product, but just because it's an existing captive customer. We're looking at a renewal right now, and they wanted a 5% increase, and I was able to show, hey, this product has stayed the same cost since 2023. The only reason this isn't something new they're bringing you. This is a revenue growth strategy for the company, and other people have successfully gotten this negotiated out of their contract. So just because you're already with them and it would be very difficult for you to move, you're seeing price escalations that really don't need to be there and have no justification other than them wanting more money than they've been getting for the last 3 years from you. So yeah, a lot of little tactics by vendors, and where the pressure is coming from them to show growth constantly. And as things get more static, they have to find other creative ways to do it and justifications. But really, all of those things still are negotiable.
No, that's a good point, and I think it harkens back to what Joseph said. It's because it's hard to switch off many of these platforms. They can up the price, and if that pain of is less than the cost and the pain to migrate, then they think they kind of have you. Chris Merin is one of our newest BCStrategies experts. Welcome. I know you focus a lot on the contact center. Maybe you want to talk about pricing there, or maybe you want to talk, what else are you seeing?
Absolutely. And I think there's an interesting point that's increasingly coming up where we're seeing those UC services and those contact center services both merging, but also being somewhat unbundled. So RingCentral, for example, are marketing that AI receptionist as a add-on or a standalone feature. And that's one of those things that historically, it would have been a contact center function. It's a virtual agent that answers the phone for you. But now that's suddenly coming into the UC. So I think we are seeing a lot more complexity in the pricing. And some of that is the vendors themselves working out, how do we actually present this stuff? How do we package it? How do we price it? We have all of these new capabilities coming in. And some of it is definitely some, slightly questionable, slightly dodgy tactics to get more money out. But some is just the rate of advancement. So we're seeing in the contact center, AI assistance for agents being one price, and that's often a per month per agent price. Then you have your virtual agent, and that might be a per minute price or a per interaction price. Then you have your transcription, and that's another price. And then you have some of your knowledge-based creation and summarization, and that's another price. And you can suddenly find yourself with AI, adding in routing, and that can be an additional price. And you can have 6, 7, 8 different prices just for your AI, and that is getting both very expensive and, to early points, very unpredictable. So we're in a situation where it's harder for businesses to understand what they're going to pay and to understand the overall value. And also, particularly in the contact center, there is an argument increasingly being made to say, hey, this can automate away this percentage of your average handle time. So if we can cut 10% off your average handle time, we can make an argument as to why that should increase the cost significantly for the solution. So I'm seeing, not just in the UC, but in the CC side as well, some significant price bumps. And those price bumps are often unpredictable for the end customer and driven by new technologies that they don't necessarily understand yet, but also at a time when I'm not seeing agent counts reducing as a result. So the cost is increasing overall for the business. Now, they're getting more functionality out of it, but it's an added cost they have to justify.
Yeah, so that complexity, and it's also the price predictability goes away, and really the vendors with a lot of this, because I appreciate this stuff's new, but they're shifting the risk over to the customer and mitigating their own risk, because if you use it a lot or more than they anticipated, they just charge you more. So they don't have to figure out their cost of goods sold and kind of eat that. So Chuck, I don't know, what do you have what are you seeing? What do you have to add? Anything different than what people have, shared?
Yeah, I'll start out by addressing the difference. And I agree, the pricing is complex. I think Beth was the first one to steal my word, complexity. But, taking it into context, we do a lot of cost modeling, and I was looking at some cost modeling we did for UC clients 10 years ago. We were putting in a number of $35, $40 a seat for a UC license. You can get these things under $10 now. So you got to look at both sides of it. So we've seen a lot of price reductions overall in terms of a UC seat. A contact center seat might have been $150 to $200 a few years ago. We're seeing contact center light licenses a lot less. So difference, I'll just throw some context that on a very basic sense, we're seeing prices go down, but they've got to make it up somewhere. And I would agree that the complexity is creeping in. When we used to do price modeling 15, 20 years ago, gee, there's CapEx, there's ProServe, maybe throw in a warranty for a few years. Here's your TCO, or here's your 3-year TCO. That doesn't work anymore. And now you've got to look at consumption. You've got to look at call legs. You've got to estimate things that you don't have any historical knowledge on. So the complexity is certainly ramped up, and all the more need for folks like us to go in and help our clients navigate through that. And then just real quickly to wrap up, there's also some hidden fees that we're seeing crop up. Well, not so much hidden, but one I like is this elimination of a ramp up. Typically, we used to get like, I'm going to sign a contract, I'm going to deploy in 6 months, we're going to ramp up. If you're not careful, you're going to sign a contract and get a bill next week from your UCaaS provider and say, we're charging you day one, even though you're not going to deploy for 6 months. So we've got to look out for that. And then to Robert's point about funny price hikes, I always remember the one a few years ago, a certain mobile provider decided they were just going to charge all their users $1 extra a month. That's it, just $1 little dollar. Who's going to squawk about that? But I did the math and thought, I think they have like 30 million global users. They just added 30 million to their bottom line per month with zero cost, other than the guy that had to haul the bank deposits down to the bank. So they're getting more clever in terms of how they do their pricing. But complexity certainly, and look out for the hidden stuff.
Yeah, and you mentioned hidden stuff, and just real quick, my business partner, turned on a Microsoft security agent. We got this weird alert, and he's like, "Hey, I'm going to turn on this Microsoft security agent because I want to see for it to explain why this thing was, a particular alert." Well, the thing is, he turned it on, and it didn't really provide any additional information because we didn't have additional telemetry or whatever. But then he didn't turn it off. Well, lo and behold, a month later, an Azure bill $5,000 because the security agent always runs. It's always running. So you're not even invoking it. So now I think, because he's a Microsoft MVP, I think he's still negotiating it, but it's substantially less. But, you talk about, and there was something in small print that said, it's going to cost about $4,000 a month if you leave it on or whatever. But, it was in really, really small print. So be careful what you turn on. But Jon Arnold, have you turned on any agents that have charged all kinds of things? What are you seeing kind of in your world?
Oh, no, that's not happening here. This sounds so much like, cutting the cord with cable for TV, and you just revert, you go to streaming, and before you know it, you got 10 different streaming packages and you're spending twice the amount of money. And frankly, you were getting a much better deal with cable before. And that's what this is starting to look like. I would, if everything you guys say, I'm seeing as well. And I think the onus falls more on the vendors to be a little more creative here. And, like my carrier, Kevin Rogers, I get all kinds of alerts from them if you set them about, when you're getting out of bounds or starting to incur new usage costs. And, I think we need to see more of that from the vendors to kind of like be on the same side as the customer and say, we know the costs are getting out of hand and expensive. We don't really have a way to control them, but let's give you some tools to say, okay, these will help you, because that's going to build, at least buy some loyalty with the customer to say, at least the vendor is trying to help you, because we're all kind of learning as we go. But if you just like sit behind a wall and say, sorry, everything's going up by $2 a user now, that's not going to win you a lot of goodwill for your customers. So to me, this is a marketing issue in terms of how you work with your customers to say, we're all going to figure this out together, and we know we need a new pricing model for this. And also, I haven't heard much in the way of having it tied to outcome-based pricing, where you say, okay, like you say, Kevin, if you deploy this AI tool and it's going to cut your handle time down by 10 seconds a call, and you multiply that across, we're going to give you a range of benefit that you should be able to monetize to justify the spend, and ideally make it cost neutral for you. you're spending more, but if you can show tangible benefit associated with that, that at least builds trust with the customer to say, okay, at least we're working on the same page here to get the benefit out of AI. And because I'm just worried about, we're going to see more and more concentration with the big tech guys who are going to be able to set the pricing. And that's economics 101 when you have basically a better part of a duopoly, or even worse, that dictates pricing whether you like it or not. And then we're just hostage to it unless we find a way to, come up with a better model, which will come, by the way, but we're not there yet.
Okay, no, that's good. And you talk about tools, and to be fair, like Microsoft has a lot of tools, and in the Azure backend, and you can set limits or whatever. In some ways, the complexity has gotten so high that it's like maybe not everybody knows how to use the tools, right? Because of course Microsoft wants to encourage you. They're really working hard to give you tools to help you use Copilot, because right now they've got 15 million paid Copilot licenses, which is less than 4% of their commercial office space. So certainly they're both trying to encourage you to use it through adoption and training, but also there are tools to monitor the consumption costs. But you got to just know they exist and spend the time kind of setting them up appropriately. Yeah. Blair, you had often talked about, UCaaS and CCaaS coming together. That sounds like it was good from efficiency. Maybe prices should go down, but I think we've heard maybe they haven't in that. What are you seeing? I don't know if you want to comment on that, but what are you seeing in general with respect to pricing in the market?
Yeah, I think because of AI, pricing is so confusing for everybody. We talked about the confusion and the complexity. So all the vendors are trying to come up with new ways to do pricing, and it's been very challenging. I think looking at the UCaaS plus CCaaS element, it's always been a problem, because you want to give some of these capabilities to people who don't normally get them. But if someone's just using, let's say, this contact center CCaaS capabilities once in a while, they don't need to pay for a full license. So I don't think most vendors have really figured out what's the right way to charge and to price for these types of capabilities. So we are moving more and more to a usage-based pricing model, so usage and consumption. So if someone is using something for, a day or whatever, they're going to pay for that. They're not going to pay for a whole, monthly license. But we're also seeing in many cases, just seat licenses are going away, and they're being replaced by usage-based in general, especially when it comes to AI. You're not, if you're using an AI agent, you're not really paying for a person or a seat, you're paying for that software. So the pricing has to be different. So we are seeing a lot of, I think hybrid is becoming the main model right now. So a base price plus consumption or usage, because finance wants predictability, but it gets really hard to do that predictability. So that hybrid mode of, some sort of base price plus consumption or usage is becoming the popular model. And Jon also touched on this a little bit with outcome-based pricing. We're also seeing resolution-based pricing, especially in the contact center, where they might say you pay based on an interaction resolution. Well, how do you define a resolution? Is it if somebody doesn't call back or get back in touch with you within 24 hours on the same issue, or can it be 3 days? So you have to really, customers have to really talk to their vendors about, okay, if we do this resolution-based pricing, what does a resolution mean? How do we pay for that? How do you measure it and define that? So that's something that's going to be really tricky that companies are going to work out. And then, tying this all into ROI, we talk about pricing, but ROI is so important, and it's just so difficult for companies to figure out, okay, I need to, get this certain ROI, and how am I going to get that based on, this nebulous pricing model. So it gets very difficult. So I think what we're going to see is really this hybrid mode, and then more and more in the contact center, at least, we're going to be seeing more of this resolution type of thing. And some vendors are saying, we're not even going to get paid if you don't get the resolution that you're looking for. Verint is experimenting with that, and we're hearing about types of that kind of thing from other vendors. So that might be a model going forward also. But I think for now, everyone's just trying to figure out how to make it work, and they're kind of throwing out all these different ideas and seeing what sticks. But it's a problem. And then we talk about light capabilities. How do you charge for these light capabilities? Like Kevin, you started by talking about the integration of UC and CC, and a lot of those are used for things like the AI receptionist and things like that. So not everybody's going to be needing that. So again, that's going to be usage based. So I wouldn't want to be the person putting together pricing for anyone right now, on the vendor or the user side.
Yeah, so obviously you got to do you got to do the work, and and there's lots of moving parts. I mean, I'm going to go back to the cloud economist, Joseph. Any predictions? Like pricing predictability, like ROI, as Blair said, is really important, but it's like when you don't know what your cost base is, it's like you got more moving variables. What do you think? Like, are we going to get back to some more pricing predictability, or the vendors are going to shift all the risk to the customers? What do you see happening kind of 2026 and longer term?
Well, let me observe that I think we're in an era of what Cory Doctorow calls Enshittification, where all of the UC vendors, they're not substantially innovating anymore, and what they're trying to do is squeeze more revenue via everybody's description. Makes me think of Oracle in the way they price, and switching costs are very high. But to the point that Jon and Blair and Beth made, if I'm the CIO and I'm facing a 1 or 2% reduction in my budget every year, and I've got this thing which should be stable, for God's sakes, we've been doing UC in the cloud now for over a decade. Why are my costs increasing? What is my ROI on this? This is something I'm going to take a really hard look at, because what is the value to my company of doing it? In the contact center, I get it, but in the rest of the organization, it's a hard thing to articulate, Kevin. I think what's going to happen is this is ripe for disruption. Somebody will come to the market with a simpler, lower cost pricing model, and I think that will force everybody to scramble. But right now, it's a bit of an oligopoly, and they're not really price competing very much.
Right. No, I think that's a great point. I know, there is a little bit of movement, just even with some of these AI features. Zoom includes AI Companion at no additional cost. WebEx includes AI Assistant at no additional cost. Microsoft is moving things that used to be in Teams Premium, which is an add-on. They're moving things in now and being included. Maybe there's a little bit of pressure. I don't know, but it certainly causes confusion. And if you've already bought the licenses, you don't really like that then the free version includes more features. So it's like not only do you have to do the math and make a decision in the moment, you almost have to keep doing the math as things keep changing. So certainly this is
I'll point out, Kevin, Doctorow makes the statement that I'll offer you something for free, you'll become reliant on it, and then I'll figure out how to charge you for it. And that's the extension of the process. And I think that's what we're going to see with Zoom and the rest.
Well,
yeah.
One can only hope for disruption, because we've been talking about AI. It feels like forever. It's the next great thing, but we're not seeing a ton of it deployed. We're seeing some micro elements of it deployed, and I think the whole pricing model is a problem. People are having a hard time justifying it, but part of that is, there was this big hype about AI, and everybody wanted to do it, and you have to do it, you have to get ahead. But people weren't really thinking strategically about what their business needed. Let's align it with the business goals and then decide what to implement. And it's really hard to justify that cost if you haven't done that.
Well, and I'm going to leave it with that, but to say it's even more difficult to justify the cost and to find the ROI when you can't even calculate what your costs are likely to be. So pricing is obviously a complex thing. It's getting more complicated. Lots of the BCStrategies experts work with customers to help them to the largest extent possible, figure out what the costs are. And maybe, you know, like as multiple experts have brought up, maybe it also is a good time to consider what are those switching costs, because maybe that is a long-term, maybe now's the time to say, hey, we've been on this platform. Maybe you should look at what the other, you know, options are in the marketplace. And with that, I just want to thank all of the BCStrategies experts. Thanks for sharing what you're seeing and just your view on the marketplace. I'm sure it'll be changing, and we will get together again and talk about this and other topics later in the year. Thank you for watching, and bye for now.
Okay.
Thank you.
All right. Thanks for
Thanks.
watching. Bye.